Hello and welcome to this episode of Focus On, coming to you live from Accra, Ghana, where the annual meetings of the African Development Bank is taking place. The discussions have been around a just transition for energy, as well as building climate resilience for the continent. Different viewpoints have been expressed and ways to look for opportunities therein. But on this special, we are focusing on two key issues, which is the annual Africa Economic Outlook of the African Development Bank, and the other is the progress of the Africa Investment Forum and how investments are being curated. In the first section, we'll be speaking to the acting Chief Economist of the African Development Bank as he shares the insights on this year's Africa Economic Outlook.
Now, as we said during the presentation, the African economy, just like other regions, were impacted heavily by the COVID-19 pandemic. We saw a growth contraction, a contraction in real GDP growth by 1.6% in 2020. But Africa has rebounded in its GDP growth to 6.9%. You can see the huge change in after the impacts of the pandemic. So the economy has been very resilient. But then, because of exogenous shocks that are not within the control of the continent, we are expecting to see a deceleration to about 4.1% in 2022 and 2023. Because we have these geopolitical tensions like the Russia-Ukraine war that has increased consumer price inflation on the continent, energy prices rising, food prices rising, and also fertilizer prices rising, breaches in supply chains and so on. All these external factors is depressing the positive growth that we have seen in 2021. And like I've also said, there are regional differences depending on the structure of each economy, regional economies, with regard to this growth recovery. With Northern Africa doing the best, recording up to 11.7 GDP growth after a contraction of 1.3% in 2020. So in 2021, they've really grown very well. But we're going to see a depression again, back to around 4.5% in 2022 because of the same factors that I have talked about that are sometimes exogenous to the countries. But other regions like Western Africa, Eastern Africa, and Central Africa had deceleration, except East Africa, which was actually very resilient during the COVID-19 pandemic due to several policies they implemented. So they recorded 1.5% growth in 2020, and now back to up to 4%, above 4% growth in 2020. And we're seeing a stable outlook in all these three regions, especially West Africa, driven by Nigeria because of the oil price increases that came from the Russia-Ukraine war, and also increased trade in commodities, and so many improvements in the macroeconomic fundamentals of countries. So Southern Africa had the greatest hit by COVID-19 in terms of fatalities and infections, and then they saw a 6% contraction in GDP growth in 2020, but they're having now a handsome growth of 4.4% in 2021, and it's seen that it's also going to have some deceleration in 2022 because of the same factors that I have shown. But one point I want to pick out here is to see the huge jump from -6 to 4-point-something%. This huge performance of economies for which we need to actually congratulate our leaders. Quite often we talk about the bad stories on the continent. We talk about growth deceleration, we talk about other things, but these leaders are doing massive efforts in order to be able to help build the economy. So we're seeing a bright future for the continent going forward.
Yeah, a bright future for the continent, you say. And as someone who's followed the Africa Economic Outlook for quite a while, it's interesting to see the approach taken this time around to look at the issues as it pertains to Africa. And I'd like you to speak to this approach that we're seeing in terms of looking at the area of climate resilience and how countries are structured to address them.
Now, this report, African Development Bank Group, is an action bank. We look as our priority goal is anything that impacts the development of the continent. And as you can see from the report, climate change is an existential threat to development everywhere, but Africa is suffering most. Even though Africa did not contribute a lot to climate change, just about 3% of CO2 emissions. We are the most vulnerable region in the world. We are the least ready in the world, and the second to South Asia in terms of our climate vulnerability. So because of all these things, this is a huge developmental challenge that we need to address. But on the other side, we also have the issue around energy and energy access, which is a sustainable development goal, because as we showed in that report, energy is highly correlated to every other aspect of quality of life. Whether you think about GDP growth, or you think about social progress, or you think about Human Development Index, there's a very high correlation. So, and the global discussion is looking at energy, because a lot of the CO2 emissions has come from the energy sector in the developed world, in China and so on. The energy then becomes the center of discussion of reducing climate emissions. So the application of you don't need to use this energy source or the energy source, the other energy source, then tend to create conditions that can actually put a brake to development on the continent. So we decided we needed to look at this confluence of factors: COVID-19, the Russia-Ukraine war, other exogenous factors that are happening that impacts African economy, but also the realities of climate change, because we have to address it, because we are the most impacted by it. Even though we didn't cause it, you can't fold your hands and say, I didn't cause it. If a flood is coming to your house, if you don't breach it, it will sweep your house away. Whether you caused the fraud or not is not the question. So we need to address climate change. It's an existential threat for us. But also we need to maintain a balanced energy mix that will allow us to be able to move towards achieving climate resilience without slowing down economic development on the continent. That's what led us to the concept of carbon budget and carbon credit. So we try to look at the whole world, each region of the world, each country of the world. How much carbon can we emit? Are we allowed to emit within a budget line that allows the world to reach global net zero emissions? And then how much is there for the region in Africa? And that analysis led us to seeing that Africa still has headroom in terms of carbon emissions. Per capita carbon emissions is still 0.95 CO2 equivalent. And the allowed carbon emission per capita is 2%, 2.0 tons of carbon CO2 equivalent. So that means we still have some headroom to grow our economies. In some other countries, you find that figure is about 14 tons of CO2 equivalent, which means several times beyond where we are as Africa. So the question then is, how do we have some optimization formula that allows us to take into account the emissions by all the regions with the goal of reaching reaching the net zero CO2 emissions by 2050? And that analysis is what led us to seeing that Africa has huge carbon credits. And when converted into financial money in terms of dollars, using the current market price of carbon, the current social price of carbon, social cost of carbon, we see that Africa could the carbon credit is worth up to 4.6 trillion US dollars by 2050, which means that Africa annually is due, climate finance due to Africa annually could be well over 170 something billion US dollars. If you think about then how much we are receiving so far, which is about 18.3 billion US dollars, then you see a huge financing gap. And that takes me to the question you asked: what should we be doing about it? The global community has been promising this 100 billion for the developing countries. That commitment needs to be met as a first step. And then there needs to be a discussion in terms of what are the real costs in terms of reaching the nationally determined contributions that we have all agreed to. In Africa, that cost we estimate is about 1.6 trillion US dollars by 2030. So if we need 1.3 trillion and we are getting 18.3
shortfall there.
For each year, if you look at the annual figures, we'll have a carbon financing gap of up to 127 billion US dollars. So for us to collectively act together as a global community to address climate change, then there is need for us to make financing available to Africa. That's one. But then Africa needs also to invest heavily on the transition process, investing in renewable energy, investing in green technologies. We have a lot of green technology minerals in Africa, battery minerals and so on, to power the new industrial revolution. That will help us increase our competitiveness in the new market that is evolving. And then for the global community, what do they get out of it if we ask them to, and how could they do it? Then we think about these SDRs, the special drawing rights of the IMF that issued $650 billion in order to cushion the fiscal impacts of COVID-19 around the world. But because of the global structure of financing around the world today, the richer gets more than the poorer. So Africa only got 33.2 billion, which is not enough compared to the amount that is required to be able to address climate change alone. So reallocating that SDRs for countries that received it that maybe don't have need of it immediately through the African Development Bank Group will help Africa to have a leverage factor of up to 4%. 4 times like what the bank does using its AAA and fiduciary capital is to leverage resources and basically multiply it for develop infrastructure investment in Africa. So that will help to multiply the impacts of those SDRs on the common African. That's the first thing. But then the second thing is we had this debt suspension initiative, DSSI initiative that was done in order to give fiscal space during the COVID-19. Now, we have other impacts that maybe is worse than COVID-19 or could become worse than COVID-19 if it's not addressed. High food insecurity because of the quadrupling of food prices because of the COVID, the war in Ukraine. So, and we have this challenge that is there, and we didn't cause it as Africans. So the same way that we try to cushion the effects of COVID-19, that same way there is also need for cushioning the effects of the impacts of the war in Ukraine. Then finally, remember you had an interview with me in 2020 when COVID-19 was starting, and I was explaining that we could come to a point where we have challenges of inflation and stagflation if we do helicopter drop, which simply means quantitative easing or easing the monetary policy to make money more available to countries.
In fact, that was my last question to you, because I wanted to get a sense from you, the 2 key challenges that we are facing the continent currently as expressed in your outlook. That's the issue of debt sustainability and the inflation challenge as well that is going on across the world.
Okay, thank you very much. So let me finish with that inflationary challenges now. So that prediction I was having then is coming true now, because basically when you create more money for the economy, then the value of the money might go down. So we have exchange rate depreciation that is happening in countries, and we have price inflation, commodity price inflation across the world now. The United States and Europe has not seen the level of inflation they are seeing now for many years. And then the impacts of the past 3 impacts of that on Africa is higher cost of imports. It is because you have to change your naira or your shillings into dollar in order to trade in the global economy. So your naira now is worth much less than it was worth before the pandemic. Now that's one major part of the impacts that we need to think about. But also, if you had a debt and you have an interest rate that you have to pay back to, in order to have some fiscal consolidation and tightening monetary policy in the United States, interest rates are rising. So if your loan was dollar denominated, your loan repayment cost has already increased without you borrowing more. So you have countries that has dwindling fiscal space, but then the cost of servicing debt is growing. So because of that, the risk of debt grows, and debt sustainability becomes the second challenge that I'm talking about. So we expect that because of all these factors, the the risks of debt default in Africa is real. Now, for the developed countries, what is in it for them? If you lend money to someone, you would want the person to repay you, right? So for the person to repay you, you don't want the person to die. You want the person's business to do well, because that's the only time when the person can repay you. I say this because I joined the bank from an investment, the African Development Bank from an investment bank in Switzerland. And you don't give loans to people expecting them to default, because it becomes bad loans. So for Africa not to default, we need to help Africa address the immediate fiscal challenges that are facing so that we can rebuild economies and be able to repay our loans. Because otherwise, the risk of default becomes real, which is not good for the lender. And the global market is also in question because of all this discussion of friendshoring, reshoring, and so on and so forth, because of the fragilities we see and volatilities we see in the global market and global financial markets now. That's not good for anyone, because Africa is like a growth engine for the rest of the world. Because if you produce and you don't have the markets to sell, you are not doing good business. So it is in the interest of the world to be able to save the markets, save the global collaboration and cooperation that we have known since 1940s, and be able to rebuild confidence in the global financial architecture that we have now, so that we can have sustainable economic development. And on the side of climate change, addressing climate change for me is neither philanthropy nor aid. It's not development aid. It's about saving our common future. Because it doesn't matter how much one party tries to address climate change, CO2 emissions doesn't know boundaries. So if Africa is addressing it and another region is not addressing it, the world is in trouble.
All right, well, what I want to get now is in terms of policy recommendations here, because looking at how with all these headwinds playing out here at the same time, African countries are dealing with quite a lot here. We've seen inflation play out. We've seen that slight uptick in Nigeria in April. We saw Ghana recording as high as 23.6% in inflation. And in terms of how that alignment could come in terms of fiscal and monetary policy to kind of assuage some of these shocks, what do you recommend in terms of how government should go about things?
Now, for aligning fiscal policy in terms of policy coordination, aligning fiscal and monetary policy to address the continued shocks that we continue to get, it is very crucial, because if you try to focus only on monetary policy, the tools we have in economics to address inflation is clear. So you do fiscal consolidation and you tighten monetary policy. Basically, increase interest rate. But when you increase interest rate, the lending rates to small-scale enterprises, to households, goes up. So it can depress economic growth in the real economy. And because if that happens, and the Ministry of Finance is not creating social safety net policies for these drivers of growth in the growth engines of the economy, then you have maybe a stable currency, but then the economy is suffering. So we need to have that policy coordination. And I think in Nigeria, they have an economic group that meets at high levels of the cabinet, with all the different ministries coming together. That is a good way to go, so that when the central bank governor is trying to make a policy, then we can look at the knock-on effects on all the other sector, on the real sector, on agriculture, on energy, on the price of food and everything, and then see what are the social safety nets that could be implemented to cushion those impacts on the most vulnerable. That is crucial for Africa at this particular point in time.
That was Kevin Urama, the acting chief economist of the African Development Bank, giving us a sense of how the African economic outlook is playing out and the thinking behind this year's outlook. Also on the show today, we'll be looking at another issue. Yes, 32.2 billion investment interests were raised for the African Investment Forum, and we'll find out the progress with the head of the African Forum, Chinelo Anuho-Amazu.
It's work in progress, the platform. It's a transactional platform. So yes, we had market days, which is to showcase what you're doing and have the boardrooms. And that didn't happen. It was postponed. We're going to have one November 2 to 4 this year in Abidjan as well. But the work continues. And the work involves curating the projects, working with the project sponsors, ensuring that those projects are prepared for bankability. We're also raising capital. I'm not sure you're aware that 32.2 billion worth of investment interests were raised during the virtual boardrooms. Part of the work we're doing now is to ensure that those investment interests translate to actual commitments into the projects and make sure that these projects themselves have the enabling structure to receive the investments and the form they're coming to. So it's a lot of interesting work, and more are coming onto our platform. We're onboarding a lot, doing the necessary KYCs and doing the necessary review of environmental impact, social impact. These are the things we look at before we put a project on our platform. So it's work in progress, and this is one of the reasons why we're here today in Accra, on the margins of the African Development Bank's annual meetings. We have a long-standing history with Accra and the entire government and private sector of Accra in supporting the platform. So we're showcasing projects that have happened in the past, and showcasing those that are in the pipeline for Ghana. And chief amongst them is a state-of-the-art health center about to be fully subscribed in terms of interests.
I mean, when you talk about Ghana and its close connections to the AIF, the finance minister making reference of the fact that the smart money is already in Africa, probably testament to how much you have been able to raise so far. But let's speak more about the projects that are on the table that you're wanting to crowd in investments into. What are these projects? Just talk to us about the sectors also that you're looking at and the level of interest received so far.
Well, as you don't, for Africa, what you focus on actually are the critical sectors, and they go through infrastructure, and whether it's human infrastructure, transportation infrastructure, gas infrastructure. These are the things that are lacking on the continent, and then building the things that will subsist. I've already mentioned the healthcare sector. We have a couple of projects on that. We have the gas projects. We also have the cocoa, the agricultural project, and in different forms. It's not just with the growing of the plants, it's through the entire value chain. We also have the fintech, which is doing very good. And in the Ghana, we have the creative industries. We have a lot of projects on our platform that speak to not just Ghana, but also the continent in general. And the location of these manufacturing companies in Ghana, which has proven to be very receptive to this kind of investment. So these are the projects we're looking at, and we invite people who are interested to contact the platform, because then we'll be able to give you more details on those projects and how you can come in. And it's not necessarily coming in. There's so many avenues to come in onto projects, and sometimes some of them are looking for just preparation, project development funding. Some of them are looking for equity, debt. It's all different, every transaction, but we have a standardized rule of engagement for all of these transactions.
I mean, I was talking to a major corporate banker earlier, and he had to rush off to a meeting because he said that he had to address investors that had around $20 trillion in the room. These are the people that he was talking to here. And the message that he was trying to point across was that the money is there. The issue is around the state of readiness of a lot of these projects to crowd in investment. So talk to us about the level of bankability of some of the projects you have on the table. What are the setbacks? What's being done to improve the readiness and the preparedness of projects, as you did allude to?
Thanks very much, and that is very critical because a lot of people keep focusing on looking for funding. There's no shortage of funding, even within the domestic realm. The amount of funds available for investments on the continent is huge. And what the issue is the preparedness of these projects to receive this funding. And that's a critical aspect of the work that is done on the AIF, Africa Investment Forum platform. We don't just say to you, oh, your projects are not prepared, go away. What we do on the platform is to assist in the preparation of that project, to structure it, to do. Some of these sponsors come to us with basically concepts, ideas, but very, very critical ideas for the transformation of the continent. So we sit down with them and walk them through the things they need to do, the structuring, the corporate governance issues, what they need to do so that an investor from anywhere in the world, not just the continent, not outside of it, there's a standardization of what should be present in this project. So this is what we help to do, and I think this is the unique part of the AIF. We don't, most investment banks, so to speak, tell you, oh, I'm sorry, we can't invest in this, it's not ready. We take those that are not ready and make them ready. And make them ready to receive this funding that we know is on the platform. And this is where also the power of the platform comes in, because we rely on our funding members. This is the flagship initiative of the African Development Bank, but we have the Africa 50, we have the Afro-Exim, we have the Islamic Development Bank, we have the EIB. All of these are members, and the DBSA, the TDBs. And they all have comparative advantages in different sectors, which we bring to the platform to enable these projects to move forward.
And right now the message is on sustainability, build back better, leave no one behind. And I like the reference that you made to the importance of women and making sure that they were included in some of these big deals, infrastructure, transport that we're talking about. And there was also a reference that was made around local content and the importance of ensuring that that was kept at a good level to encourage sustainable growth and the benefiting of communities. So just talk to us more specifically about that, the actual plans, the steps that will be taken to crowd in more women at the table and to also ensure that more local businesses benefit from the growth that is Africa.
Well, you know, women, the AIF has a pillar, women as investment champions, and that's what we started in 2019. And it was to shine a spotlight on the women businesses because of the particular nuances of the challenges that they face. And what we find is that the woman, businesswoman, has a capacity to multitask. And this capacity is what we're honing in terms of projection, in terms of making resources available. They don't really need more help except that which is an enabler, because they have the capacity mentally to push their projects forward. And I'm happy that we have on our platform about 9 women deals, women-led deals, and they're worth about $9 billion. And we find that they cut across different sectors, from a refinery to a tannery to a textile manufacturing. We have the creatives as well. We have a fund which is women-led on our platform, and it's for the creative industry. We have those who are involved in essential care and the manufacturing. We have the agro businesses, and you see, the woman who is innovative always comes from a need. She's solving a problem. It goes beyond just making money for the woman, and this is what we found in our work with the women-led deals. They're also plugging in a need, a societal need, be it a child who needs some care, or be it just to make their manufacturing clothes, shoes better and on the continent. So part of what we do is that it has to be on the continent. We have to source as many resources as we can on the continent. We have to ensure that you control your value chain, from the products that you need to manufacture what is, whether it be a bag or a pair of shoes or some clothes or shea butter, all of that step, we are focusing on placing it on the continent. And it's not easy, but it's also not impossible. And that's why we appreciate the support of, the AfDB has the AFAWA program, and they've already pledged quite a substantial amount of money to the Africa Investment Forum platform to assist in what we did. And we're receiving pledges, both private, family businesses, institutions, and GFIs for the same purpose. So the future is bright for the women, and I'm very proud of that.
And that was Chinelo Anuho-Amazu, the head of the African Investment Forum, giving us a sense of where they are at right now in terms of investment interest for the continent. And it brings us to the end of the show today. Thank you so much for watching. I'm Kenneth Ibomo. Enjoy the rest of the day.